Good day everyone, thank you for joining me. I'm Tamara Kukshinovich and I'm going to take you through the Growthpoint EIA. In March, Growthpoint released interim results. The highlights were as follows. Revenue increased 12.5% to 6.6 billion rand. The cost to income ratio grew from 37.3% to 41.4%. Overall, South African vacancies deteriorated from 9.5% to 10.3%. Total group vacancies also worsened from 7.6% to 9.2%. Distributable income decreased 21.6% to 2.5 billion rand. The distributable income per share fell 31% to 73.1 cents. The company resumed paying dividends at an 80% payout ratio, resulting in an interim dividend of 58.5 cents. Net debt decreased 12.4% to 62.2 billion rand. The weighted average maturity of debt for the South African borrowings decreased from 3.6 years to 3.3 years. The South African, Growthpoint Australia and Capital and Regional properties were revalued, resulting in an overall decrease of 5.8% to 157.1 billion rand. The group's loan-to-value ratio improved from 43.9% to 40.7%. NAV per share fell 7.6% to 21 rand and 32 cents. During the period, the group also raised equity of 4.3 billion rand. Over 358 million new shares were placed at 12 rand per share, resulting in a 6.3% premium to the pre-launch 30 business day volume weighted average price of 11.29 rand per share. The market reacted neutrally to the release of the results. The share price decreased 0.1%, closing at 14 rand and 8 cents per share on the day. Since our neutral recommendation in September 2020, the share price has underperformed the benchmark with a return of 12.7%, while the benchmark, the SAPI index, returned 28.9% over the same period. Year to date, the share price rose 10.2% and the benchmark by 9%. On a price to book basis, the group is currently trading at a 15.3% discount to its peers and a 29.8% discount to its 5-year average. Growthpoint has a moderately high gearing level as indicated by the loan-to-value ratio of 40.7%. However, it remains well below the covenant of 55%. We believe it indicates that the share offers good value given that it is trading at a 34% discount to its NAV. The interest coverage ratio was impacted by the negative effects of the pandemic, considering the group's exposure to retail and tourism, but remains relatively decent at 3.3 times. Additionally, the near-term cash requirements remain low, with 8% of term debt maturing in the next year. The group has enough liquidity to meet commitments when they fall due. The lower rental growth outlook has resulted in group assets being impaired by 5.8% to 157.1 billion rand. We like that the group is geographically diversified with investments in South Africa, Australia, the UK and Central Eastern Europe. It is also segmentally diversified. The pandemic has highly affected the South African unit due to its retail exposure, as well as the V&A being negatively impacted by restricted global and local tourism. GOZ and Global Worth were less affected because of their high exposure to offices and industrial. Capital and Regional is retail focused and was also significantly adversely impacted by COVID-19. We believe that once tourism resumes, the V&A will start recovering. GOZ and Global Worth are expected to recover faster because of their strong balance sheets and the minimal impact from COVID-19. We anticipate Capital and Regional's recovery to be long drawn out. At FY20, the board had decided to defer the decision to December 2020 on the second half dividend to have financial flexibility and preserve liquidity. The group has resumed paying dividends now at an 80% payout ratio. Additionally, management has decided not to provide any guidance due to the high level of uncertainty, but they are committed to keep the REIT status and continue to pay dividends twice a year. While we do recognize a difficult valuation cycle, we feel the share offers value, trading at a 34% discount to its NAV, and we change our neutral position for the SA equity portfolio to overweight, and we change our overweight position for a property-only portfolio mandate to a neutral recommendation. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk, and the report on Growthpoint can be found on MyBase. But before we end off, please take note of the following disclaimer. Thank you.